So let's first begin by, let's say, setting the stage with a look at the broader forces shaping crypto adoption in Latin America. And so what would you say are the main drivers behind digital assets adoption in LATAM? And how do they compare to other regions? Maybe Desi, you can start us off.
Yeah, so LATAM is one of the biggest emerging markets and also one of the most interesting when it comes to crypto adoption. There is a unique mix of factors that's driving interest in crypto. These include, of course, the macroeconomic environment, but also other factors such as demographics. The region has one of the youngest populations. The average age is around 30 years old, and this is a tech-savvy population. We also have technological infrastructure and financial inclusion. I think maybe the most important one is really the macro environment and the fact that in LATAM we have this legacy of high inflation and currency devaluation. To give you some numbers for the 5 top economies of the region, which include Brazil, Argentina, Chile, Colombia, and Mexico, the average inflation over the past 15 years, so since Bitcoin was essentially created, was something like 14%. And this is 7 times more than what we had in Europe. In Europe, the average inflation was something like 2%. Of course, it varies a lot between countries. We have countries such as Brazil, where inflation averaged something like 6%, but it was very variable. We had years with 3, years with 10. Other countries such as Argentina and Venezuela, we know that recently we had hyperinflation there. The average inflation in 2018 in Venezuela was 65,000%, which essentially means that every 20 days or so prices doubled. This is very hard to imagine for someone living in Europe with 2% inflation. And in this environment, crypto is seen as a hedge against local economic uncertainty. It's a way to safeguard wealth. And I think another important point to mention is growth. Growth in the region has been slowing down over the past 10 years, since 2015, 2016. Many countries are reliant on commodities. Commodities pricings have been slowing down, and they have been looking for alternatives to growth. Now, this is challenging for many countries, especially after COVID hit, and we had another rise in inflation. Central banks in the region were very aggressive in tightening their monetary policies. At some point, Brazil's real rates were actually the highest in the world. And this is, of course, also impacting growth and investments. And it's also related to the inflationary environment we have, right? Because this impacts how people are shaping their inflation expectations, and central bank has to be more aggressive when tightening. But all this is actually leading tied to a political environment and a lot of political shifts we had over the past few years, more radical and more frequent shifts in governments. In Argentina, we had the election of Javier Milei, but before that, in Mexico, we had a shift. The Morena coalition took over the 2 main political parties which have been dominating the Mexico political life for the past century. In Chile as well, we had elections in 2021, which led to a shift from the 2 center-right and center-left parties, which have been dominating the country's political life since more than 16 years. So overall, political uncertainty and macro uncertainty both tied together and driving this demand for alternative assets. And as I mentioned, there are other factors, fundamental factors driving adoption, which I think are important to mention and include the financial inclusion gap, the level of technological readiness, and demographics.
Okay, very interesting. Thanks, Desi. So to wrap it up, it's inflation and very drastic political shifts. Anton, anything you want to add?
Yeah, I want to highlight the banking and neo-banking situation here in the region. It's really specific for this area. In many countries still, there are a lot of people who cannot have access to the banking solutions. So imagine living in this world like 21st century, and you cannot get not even a card. You cannot get like a bank account to deposit your funds, to send funds to your family abroad. And it's really challenging. Like how would you use like your day-to-day life, how would you pay for your services? How would you pay for your food? Even how would you pay for your rental if you don't have a bank account? I'm not even talking about card or credit card. It's even beyond that. So we see a lot of solutions here in financial technology sector, which are called neobanks. So those are alternative financial solutions to the classic banks. They combine like crypto, stablecoins, Bitcoin. They allow access to those digital assets as alternative to the standard fiat banking systems. And being in these countries and see how people use them, how people actually can solve their day-to-day problems using stablecoins or crypto, it's really mind-changing, because in the world, like if you are in Europe, you can see that almost every single person has a bank account, every single person has a credit card, every single person has a fiat cash. And it's completely different here in LATAM. You can see people are more used to crypto and stablecoins and digital wallets, and they can live literally without any cash or fiat in some places. And that's really the future is, I think, and it's interesting to see what are use cases, what technologies and solutions people use, how they use those means of exchange for their day-to-day life, and what could be the future of fiat as well.
So the perfect recipe for crypto adoption is a mix of high inflation, political shifts, and financial exclusion. I guess that's what's worked for LATAM. But now building on that, let's take a closer look at what is happening really in some specific countries, but through the lens of trading data. Desi, seeing as you have a bunch of data and you're the expert at Kaiko on this, what major patterns or shifts can we see in the trading activity and asset preferences of users in Brazil, Argentina, and Mexico even? And Anton, maybe if you want to start off by discussing more about the mobile aspect, or even you mentioned financial exclusion. Is this related to the access to internet, to mobile, to a laptop, to anything that you want to touch on first?
Yes, happy to share here. As I mentioned, it's really specific for this area for people to be using more like mobile phones and digital wallets instead of fiat and cards. So we see it specifically in key countries like Brazil, Mexico, Argentina, and Colombia, or even El Salvador, where Bitcoin is a legal tender. You can see how people are using digital solutions and mobile phones on a day-to-day basis instead of fiat money. And here is some data about mobile phone ownership and digital payments, but those are pretty widespread on the internet. I want to focus more on top of that, I want to focus more on banking coverage and maybe give you some examples of some specific countries where neo-banking is a big thing. Brazil, actually, it's right here in the region. You can see like pretty high numbers of phone ownership. It allows a major like financial institutions. In this case, in Brazil, it's a new bank. It's almost like a bank, but it's not really a bank. But you can still access banking services through the mobile application, and all you need is just internet and mobile phone. And in a country where it's a high inflation, in a country where it's not easy like to get access to the banking accounts, even though in Brazil it's pretty high, like it's almost 90% of population or more is banked, so almost everybody have a bank account. But still, there are problems with standard banking services for the people, where like high fees, there are like slow settlements. It's not easy to send money abroad. It's not so easy to get access to crypto assets. So those early players who enter the market and who offer like alternative banking solutions, they are really like flourishing if they are on time on those markets. And Brazil is a good example. In Brazil is probably one of the leading countries in the world now, where amount of population, percentage of population of the country is using alternative banking solutions. And in Brazil, it's around, it's above 40%. Can you imagine, like, if 90% of the country have bank accounts and can use the standard banking solutions? But still, even if when everybody have their banking account and applications, they still prefer, half of them at least as of now, as of today, prefer to use alternative banking solution using like crypto assets or stable coins. It's just where future is probably, and we can see this same trend in other countries in the coming years, where people who are used to the banking applications will start switching more and more to neobankings because it's faster, because it's easier, because it allows you to use crypto assets in a better way, and you don't need to wait like another several business days for your international transaction to settle. You don't need to pay again like $30-50 just to send money abroad to your family or friend. It's really becoming trend, and it's really amazing to see how Brazil is leading this innovation in terms of adoption across their population. Again, if in a country with 90% banked population, you can see half of this population is using alternative banking solutions, using neobanks to get access to stablecoins, crypto payments, and so on. And other countries are also getting up to speed in the region. We can see like Mexico, Argentina, and Colombia, also good examples and very innovative. And it's a lot of competition there on these markets. We can see on the levels of 30 to 40% in these countries, also people using neobanks as alternative to classic banks. However, in those countries, it's a much lower percent of banked population. Usually it's 60 to 70 or 80. Again, so those remaining 20-30% for them, neobanks offering stablecoins and crypto assets is actually a key to get access to financial system and to be able to pay, to be able to buy, to be able to send cross-border. So it's really amazing to see how this region is leading the whole world towards like digital assets, digital payments, native crypto assets, and this kind of revolution of financial industry.
Yeah, for sure. And Desi, are you finding the same trends in the trading data or any type of, the more crypto data that we have on here, whether it's in Brazil or Mexico, Argentina, or any big economies?
Yeah, definitely. First, some context about the data. We at Kaiko published last year the first edition of our LATAM report, which essentially covered most of the centralized exchanges present in the region, liquidity and trades data. And we are publishing in the following weeks the second edition. And what we see in the data is definitely a story of organic growth and catch up when it comes to the region. So the charts I'm going to show now are a sneak peeking to what we are going to to have in the report. But yeah, I totally agree with what Anton said. There is a huge financial inclusion problem in LATAM, which is related to a lot of reasons. It's macro, it's low trust in financial institutions, but not only. And digital banks and neobanks and crypto are offering a solution to this huge problem in the region. And definitely this is one of the things that's driving adoption. What we see in trade volumes is essentially a trend which started in late 2023. So right after we had this huge rally in crypto, which came about after the approval of spot ETFs, actually the pricing in of the approval of spot ETFs in the United States. And this trend continued in 2024. So we see a very robust increase in the volumes for the top LATAM currencies, which include the Brazilian real, the Argentinian peso, the Mexican peso, and the Colombian peso. When we look at the monthly trade volumes, they have averaged something like 2.6 billion in 2024. And in 2025, we have a higher number. We have 3.1 billion. Actually, if you look at the cumulative volume for Q1, 2025 was actually an all-time high. in trade volumes. So definitely robust adoption. And it's quite interesting to see that during the current period of volatility. One very important thing is that the region has outperformed other regions in terms of growth. So when we look at the percentage change in monthly trade volumes, the top LATAM currencies are the top performers. We have the Brazilian real, the Mexican peso, and the Argentinian peso are the three top fiat markets by growth since, if we take the period since the start of 2024. So amazing catch up relative to other regions, and definitely robust organic growth in the region. So maybe we can move to the next chart. Yeah, it's a fast growing market and more competition. This chart here shows the main centralized players, centralized exchanges present in the region. We see that we have both local and global exchanges present in LATAM. The largest exchange is Binance with a 57% of a market share. However, its dominance has declined quite a bit since 2021, when it was something like 70%. And the reason for that is, of course, the regulatory issues Binance had over the past few years in a lot of jurisdictions, including Brazil. And also, another important thing is that Bitso is still the largest local player with 26% of market share. But its market share has declined a bit since over the past few months, mainly because new players are entering the market and taking some market share. And that is actually super interesting. One of the main indicators and proxies for local demand we have when it comes to centralized exchanges is the number of newly listed fiat trading pairs. Because generally when you list a fiat trading pair, there's a lot of fees, banking partnership involved, so it's costly. So when we look at the number of new fiat trading pairs for the region, we have more than 200 listed since 2024. So definitely a indicator that shows that the market is growing and more new players are entering LATAM. So a sneak peek into what people are trading when it comes to individual markets. And this is the next chart. So yeah, one important thing to mention about LATAM and the countries in the regions is that there is a big difference between the structure of the market. Brazil is the largest market. The market share is over 70%, and it's also one of the most mature markets when it comes to institutional participation. The reason for that is, of course, that we have a lot of financial innovation. We know that the local B3 exchange is preceding US markets when it comes to listing new structured products. So we had very recently the first XRP ETF launched on B3. Before that, it was the first Solana ETF. They are still to be launched in the US. And so, yeah, growing institutional participation, and the use case here for institutions is really investing in crypto asset as a portfolio diversifier, as a digital gold, which offers upside potential, similar to what we have in the United States and our other developed markets. When we look at the top traded trading pairs, however, we see that stablecoins are actually the top trading pair. So we have a mix between, on one hand, stablecoins, and on the other hand, the Bitcoin and the top altcoins, which is a structure we see very often on other institutional markets, such as Coinbase, for example. And the reason for stablecoin dominating the market is, of course, the fact that in LATAM we have this use case around payments, around digital dollars, which Anton mentioned, and is related to the macro environment, the financial inclusion, payments, a lot of remittances. It's the biggest, the largest regions, one of the largest when it comes to remittances. So a lot of that. One interesting thing is that Bitcoin is very, very liquid. The Bitcoin, the Brazilian real quoted Bitcoin pair is the 5th largest Bitcoin fiat market. So yeah, another thing to mention is that crypto is growing in prominence in Brazil. A recent study showed that it's actually, it has overtaken other financial, other investment options such as gold and equities in the country, which is very interesting. So moving to the next chart. Mexico. Mexico is another market. As I mentioned, there are a lot of differences between LATAM countries. When it comes to Mexico, here we have another use case which is really focused around XRP leveraged remittances. The top traded assets here are XRP and stablecoins. Almost more than 40% of the total top 20 traded assets on Bitso, which is the largest Mexican exchange, are actually involving stablecoins on fiat. So really a use case around remittances. We know that Bitso, Bitso's B2B arm is actually processing something like 10% of Mexico remittances. And this use case around stablecoins and payments is also very much dominant for the other markets, smaller retail markets, which are Argentina and Colombia, where we have also stablecoins as the most traded assets. And finally, the next chart and last chart is a sneak peek into how stablecoins are actually traded during the recent period of volatility. So generally, what we see when it comes to stablecoin activity is an increase over the past years. And when we have a market, when the market is rising, actually stablecoins are often traded as a way to enter the crypto space. And this is linked to the fact that they are very liquid, right? Stablecoin quoted crypto trading pairs are much more liquid than fiat quoted trading pairs. If you want to be involved in any kind of lending or borrowing activity, you have to go through stablecoins. So it's an entry point into crypto, and generally we have net accumulation. And this is, by the way, the chart here is showing the CVD, which is the cumulative volume data. It's an indicator we calculate based on tick trades. And it's essentially the difference between the hourly volume and the hourly buying. When this is positive, it means net accumulation of stablecoins. So people are basically buying stablecoin for fiat. And when it is negative, it means selling. And so we noticed that during the recent period of volatility we had with the tariffs, we had mostly net selling of stablecoins in developed countries. So this is the USD market, the Euro market, but also the Brazilian market. So Brazilian market is a bit of an outlier when it comes to LATAM, because in most of the other countries, we had, on the contrary, accumulation of stablecoins. So people were actually buying stablecoins and treating stablecoins as a store of value. In Brazil, many reasons can explain this trend. It can be related to regulation. We know that the central bank is currently regulating stablecoin transaction, or at least proposing to regulate this transaction around stablecoins. We also know that there is a high concentration of institutional traders, which can also explain this trend, which, as I mentioned, it's really in line with what we see in developed countries. And it can also be related to the fact that a lot of fintechs are actually present in the market, and some volume can be going through fintechs and other platforms. So yeah, interesting trend to follow.
Okay. Now, well, given those trends that you just mentioned, I'd like to turn to the more, I'm going to say, distinct roles that digital assets are playing in everyday life. And Desi already kind of touched on this, but I'd like to dive a bit deeper into how are stablecoins and Bitcoin being used differently by LATAM users? Because I know it's a bit separate. And so are there any clear patterns or surprising use cases? And we could also open to Anton. It's just that you were touching on this. Anton, feel free to swoop in here.
Yeah, do you want to start, or do you want me to start?
Go ahead, Anton. How are stablecoins and Bitcoin being used differently?
Yeah, since I'm now in El Salvador and I'm here for last 3 years, where Bitcoin is a legal tender, I can share some experience from here. Like initially, Bitcoin was created as an alternative to cash, right? It's like a peer-to-peer digital cash. But what we saw, due to its volatility and a lot of speculation on the markets, people started actually investing and to consider Bitcoin as a stored like value, like a gold, basically. So what we see, it's very mixed use case for Bitcoin these days. People still use it for transactional purposes, like buy things, especially here in El Salvador. You can go and pay for literally any service. You can buy any product using Bitcoin. You can buy a house even using Bitcoin here, what people do in many cases. But also people used to invest in the Bitcoin to avoid inflation or to have a long-term savings instead of like a pension funds or retirement accounts. It's foreseen a better investment for the long future, especially like now since we just went through a halving again, and people might expect a return of investments. So Bitcoin is a very special case comparing to stablecoins, I would say. And of course, depending on the country, in some countries where regulation is more advanced, like El Salvador, Bitcoin can be used for payments and and like daily life. So like as a means of exchange as a means of like a currency, like for payments, but also as an investment like gold. So it has characteristics of both, and that's really interesting to see how world will turn around in the next coming years. With stablecoins, it's easier. I would say it's more straightforward. It's literally a way like to get digital access to your standard fiat funds exactly as you used to. You know the value. It's stable. It's stablecoin because it's stable. It's pegged to the value of fiat currency. So you know what to expect. You know what can you get. You can withdraw anytime, but still you can take a benefit of blockchain and digital assets, and you can send cross-border to your friends, to your family. You can purchase abroad. So I would say, yeah, use case for stablecoins is very straightforward so far, and to be used for payments and international payments and transfers.
Yeah, remittances are a big use case as well in LATAM, specifically for Mexico. And now you mentioned El Salvador with Bitcoin. They enable Bitcoin through regulation, and so we're seeing this with more and more countries releasing new regulations for what is called VASPs, so virtual asset service providers, the equivalent of CASPs in Europe for MiCA. So what is the impact of those local regulations and on crypto adoption? And Desi, you can jump in if you feel
Yeah,
it.
maybe I can jump in here. So about regulation, I think it's super interesting to look at the region as a whole because different countries have had different approaches. We know that El Salvador has adopted Bitcoin as a legal tender in 2021, but other countries such as Bolivia or Chile, Bolivia in particular, for example, it was one of the first countries to ban crypto in 2014. Overall, what we see in the region lately, over the past year, let's say, is that regulators are increasingly considering what crypto can bring. And this is, I think, a direct result of the fact that Bitcoin has gained in credibility as a investable asset after the approval of ETFs, but also more recently after the approval of a U.S. strategic reserve, right? Even to get back to Bolivia, for example, as an example, they softened their stance towards crypto. Last year, they authorized regulated crypto transactions. Overall, a lot has been done in the region around oversight of VASPs. We have a registry in Argentina. I think very recently Colombia proposed to introduce licensing regime for VASPs. Yeah, I mean, one of the most interesting countries is definitely Brazil. One of the reasons is, of course, that they have a very, very vibrant fintech sector, and they have been regulating for some time now. In 2023, actually the law was approved in 2022, but entered into force in 2023. They approved the VASP law, which essentially regulates, first names the central bank as the regulator for VASPs and introduces some basic definitions. So it's not exactly as MiCA. MiCA is a really comprehensive framework which is like directly implemented. It's more like what Turkey has in terms of regulation. You have this framework, and then the central bank as the regulator of VASPs is currently proposing more specific regulation around VASPs, and they're being discussed. There is a public discussion going on around this. Some of the interesting specifics that are being discussed is around the segregation of assets for VASPs. The definition is quite broad. They include a lot of different services, custody, transfers, transactions, and so on. And of course, around stablecoins, this is what I mentioned previously when I mentioned, like when I talked about stablecoins, they are currently proposing to regulate cross-borders transfers for stablecoins, essentially foreign currency-backed stablecoins. And they are not the only emerging markets looking into this. We know that South Korea as well is currently proposing regulation for USD-backed stablecoins. Again, they propose to include them under the FX law. Yeah, it's one of the most important and interesting things to follow when it comes to Brazil, how this regulation is going to be implemented. There are a lot of questions remaining, whether because some of the propositions involve limiting stablecoins transactions. And one of the questions is actually, does this include domestic transactions or not? So yeah. But overall, Brazil and the region is going to regulatory clarity when it comes to, it's a global trend when it comes to crypto assets, and it is very positive for the industry.
Yeah, so it's another positive factor for crypto adoption.
Oh,
And
definitely. Yeah.
I'm just going to intervene because we've received a question from the audience that's very relevant to what you were just speaking about right now. And the question is, if central banks launch digital currencies, do you think people will still use stablecoins? And
Yeah,
seeing as
that's
it's a bit intertwined with regulation, so that's why I'm asking it now.
Yeah, it's super good question, and I know that globally we had some CBDCs that did not do well. We had the e-Naira, which was not really adopted, and we also, I think, in Ecuador there was previously a failed attempt to launch a CBDC or something like that. But overall, the question is really around credibility, right? It's the CBDC is a digital version of the local currency, and we have a history of inflation and currency devaluation in LATAM. So I would say that stablecoins will still be used, and really depends how restrictive the CBDCs are, whether you have limitations when it comes to cross-border transaction or not. How's the privacy features? Do you have any privacy features actually with CBDC? So yeah, it's really an interesting question.
And now that we've explored the market dynamics and user trends, let's shift our focus to more how platforms and data providers are actually responding and what's on the horizon for 2025. And so, Anton, what are some of the main priorities and product innovations LATAM-focused platforms are working on right now just to meet user needs?
Sure, happy to share. Again, we as AlphaPoint, as one of the, I would say, leading digital assets infrastructure providers in the region, we see like a lot of different projects coming in. We already like working in several countries, like in El Salvador, we're working with the government to provide a Chivo wallet for payments and Bitcoin support. In Colombia, we have a crypto exchange, which is pretty popular among population. We also recently launched. We helped Bank of Colombia to launch Venia digital wallet. Same situation in Brazil. We are working together with CoinNext, which is a client of us for a long time, and Flow BTC. So what we see in the region that if several years ago it was a very standard use case to like launch a crypto exchange and to offer those assets through the exchange to the users. Now we see like a shift from exchange business, from just a crypto exchange business, more to the payment solutions, more to the like a companion apps for the banks, like Venia and Bank of Colombia. So we see this shift from just being a crypto exchange to more like being a payments solution and a real solution for day-to-day life, for regular people, also for institutional users. And together with that, we see that there is more demand for more innovative projects. for custom developments, like building those wallets or connecting existing digital wallets to the crypto assets, to native crypto assets, to offer to existing users of the payment application, let's say. Also, we see many projects in tokenization area. I think it's worth mentioning that people considering not just to trade or use existing coins for trading purposes or for payments purposes, but now people also consider tokenizing real world assets. It can be either like a land. For example, in Mexico, we saw it's a lot of like land, which is hard to get investment, and owners of these lands with these land areas are looking into the alternative ways how to attract investments, and tokenization can be one of those. So we might see also new tokens being issued in the region for various kind of businesses and assets, not only like currencies or commodities, but also real world assets like equities, like lands, like buildings, or even businesses. Here in El Salvador, it was launched a tokenized bond to build a hotel in the airport, for example. It's a good example how product innovation and digital asset space can change the financial flow and use cases. How new projects might start in the region, and I'm not talking about digital projects. I'm talking about real projects like building, like developing the buildings or building new things in real world outside of digital space. So it's really interesting to see what will be happening next coming years, especially now since regulation is more friendly for the digital space. We see those shifts from just being a crypto exchanges to payment solutions and even beyond to tokenization and allowing access to the new projects through digital assets.
And speaking of shifts, what features or capabilities have you seen any features or capabilities that have really become now essential for building trust and reliability in them?
I would say we also saw it many times that existing companies like either neobanks, wallets, or even banks were trying to build solutions themselves from scratch. Because in general, you can find a lot of solutions in open source. You can find like a lot of SDKs available on the internet.
Yeah.
But really, the question is like how scalable you want to be, how reliable you want to be, how secure you want to be, how fast you want to launch to the market. Because it's also in this like race of crypto assets and blockchains, it's really essential how fast you can be, because you have to compete in a very innovative and fast moving environment. So I would say like scalability, like performance, reliability, and ability to launch fast, those are keys to enter in this market space. And as Desi mentioned, I think this is what we see, what's happening, right? We see that key players like Binance, for example, they are struggling and they have their own challenges into the region. So that gives opportunity to other players to enter the market. And we see like in this chart, let me just be back for a second. You can see here this little like blue area like catching up, right? And that means that there are new players entering the market, and we might see this happening more and more. But here's a question: once you are in the market, first you need to be very fast to enter the market when you have an opportunity, and second, you need to be reliable. You need to be performant, and you need to be ready for those spikes when it's a high volatility. So it can be low volatility for a long time, as we already saw. But once some key events happening and crypto assets started to be traded to very, very highs, you need to be ready, and your application needs to be ready. So it's not just about use cases and what your product can do. It's also about underlying infrastructure and being able to handle this high workload, especially during those spikes. If we talk about features of the product itself, like user-facing, it's still same, I would say. Exchange and being able to trade assets, it's really a key, and it's becoming more and more essential in any kind of payment application. Because like even if you want just to use stablecoins, you still need to do on-ramp or off-ramp, or you need to convert one asset to another asset. Either it's a fiat to stablecoin or another crypto to stablecoin or vice versa. It's always an exchange factor. So that's why we see that exchange component and trading is still very essential and the key for any kind of crypto project, I would say, not only trading or exchange platform, but even simply a payment application. It's still relying on trading component, and having capabilities and having advanced capabilities of trading and surrounded ecosystem like liquidity services. It's essential to be in this game these days. To have like brokers, to have a friendly environment for liquidity providers to be connected to your ecosystem. It really makes a difference. Once you are in the market, you have to be you have to fulfill demand coming to your application. And of course, you need to be scalable. You need to be compliant and secure, because at the end of the day, this is what matters. It's all about funds. We are all people. We want to make sure that our funds stored or transferred in a secure environment, and there is as less intermediaries as possible, not only from the commission and fees perspective, but also from transparency and trust perspectives. Because when we go digital, it's more important just to know whom we trust and to be able to track where funds going through during transfers.
And yeah, you mentioned
yeah.
there's a huge competition. See, I think this is going to be relevant to this. Desi, earlier when you went in the chart that you recently showed, we see the small blue spiking up, meaning there is more exchanges coming in the landscape, and so that means there is more competition, and you need as an exchange to kind of differentiate yourself. And so, how important would you say it is to localize the user experience? Because I know that's been the case for some exchanges. And when I say localize, it can be through, accessible, on and off ramps or having a local language support, etc. But would you say that helps, and how important is it really?
So yeah, definitely. Yeah, of course, you have to have a localized experience. One thing I think it's super important when it comes to competition, it's that exchanges are not only competing against each other. So you have new actors entering the space, and this is normal because it's a very fast-growing market. So of course you have more and more platforms participating in the market, but they are also competing with fintechs, which offer like easy on and off ramp without the KYC and AML. And it's super easy to use Nubank. Most of the new banks have a crypto feature. So I would say the competition is really global, and so it's essential to be able to differentiate when it comes to the market. One would be, as you mentioned, we really have something very custom made for the different markets. And here I think it's important to understand the market and to be able to understand the differences between the people participating in the market. For example, Brazil, it's a lot of institutions. We have a lot more different types of clients and brokers. And I would add to what Anton said about the need to have robust infrastructure when it comes to brokers, and the need to have like liquidity monitoring and liquidity when it comes to liquidity for brokers, because brokers need to be able to to monitor the market and to monitor where they can get the best execution. So yeah.
Yeah, adding to what Desi just said, yeah, completely. In this region, in the Latin America region, it's primarily Spanish speaking, and in many cases, people don't speak English and they only speak Spanish, and you have to speak their language to be able to offer your services. And it's not only language; it's also like being local to see, like to understand how people can withdraw and deposit funds from your application and platform. It's essential. What kind of KYC solution could work best for them? And of course, like in these countries where not many people have computers, maybe these days, but almost everybody has a phone. It's essential to offer a mobile-first experience through the application. And this is what we see, and this is what we do in partnership with major players like Bank of Colombia in Colombia. It's really mobile-first life here in LATAM, and it's essential to offer services through the mobile application, to speak their language, and to be integrated with local ways, with a local like rails for on and off ramps for those assets. That's essential.
Okay, and now that we've looked at how AlphaPoint really helps exchanges and any pretty much, I mean, crypto company needing infrastructure in LATAM, Desi, on your end, could you share how Kaiko's data is actually being used in the region, and do you see any emerging use cases with that data?
Yeah, definitely. So we have a very interesting mix of use cases in LATAM. On the institutional side, we work with major asset managers and issuers. Like we work with Hashdex, which is Brazilian native asset manager. They issue ETPs, and we provide benchmarks for their crypto momentum HAMO ETP, which is listed in Europe on the SIX Swiss exchange. They also use our data for NAV calculation. And this is a use case we essentially see in other regions like the US and Europe. But next to it, we also have a new, let's say, emerging group of users, which includes new banks and different payment providers. We work with Nubank. Nubank is one of the biggest new bank in the region. They serve more than 140 million people across Brazil, Argentina, Colombia. And they actually use our data for best execution. So essentially, transaction costs, slippage calculations, spreads, etc. when it comes to their crypto to fiat transactions and conversion services, right? And this is a use case we see is kind of gaining traction because for many different market participants, it's really important to have this visibility, comprehensive view on liquidity, and not only when it comes to centralized platforms, local centralized platforms, but also global platforms. It's a use case for any type of broker because brokers are generally they have to offer best execution to their clients, and having this, there is more sense to have more than one liquidity provider in order to provide this true best execution, right? So a use case for market makers as well. They also need to have visibility of how liquidity on different platforms is comparing queries. Where do you have the best cost? And also use case for exchanges, because exchanges sometimes act as brokers for some trading pairs. They may have like order books for some pairs, but not for all. And for others, they have to execute on other platforms. And in this case, they need to have data on slippage, spreads, market depth, etc., in order to get the best execution for their clients. So yeah, definitely a growing use case and a transversal one between different types of users.
Yeah, so everything is growing in the right direction in LATAM for crypto. We'll call it as such. Well, anyways, thank you both for sharing all those insights, and we'll now open up the questions from the audience, and the goal here is to be as interactive as possible. And the first question that I saw, which to me is one of the most interesting ones, is the following: It's what does the current trade war mean for LATAM? Very simple, but the answer I think is a bit more complex. And to whoever wants to take it.
Yeah, I can start. I think there is a lot of uncertainty around tariffs. What we saw on Liberation Day, most of the LATAM countries were under the blanket tariff rate, so 10%, which is better than what LATAM countries had. And I think when it comes to the market reaction, the Brazilian yen, for example, had a very mixed reaction. It actually gained in value a bit. And the reason for that is that when it comes to exposure to the United States, there is a difference between the countries. Brazil, for example, has a trade surplus with the United States since 2008. And when it comes to the share of the US in their total exports, it's a lot less than Mexico, for example. Mexico is very exposed to the United States. More than 80% of their exports is going to the United States. Brazil's, however, has something like 11% of their exports going to the United States. And I was personally quite surprised to see that when it comes to agriculture, most of their production is actually going to China. So one of the thing is that with the current trade war, they can benefit from more demand from China. Of course, this is not certain. We have a lot of volatility in the market. We don't know what will happen. Just yesterday, I think there was some hopes that the US will take a U-turn when it comes to tariffs. So yeah, still a lot of uncertainty and very different, a lot of differences between the countries when it comes to dependency, trade dependency between the countries and the US.
Interesting. Another question that we've received is, do you think more people in LATAM prefer stablecoins or Bitcoin, and why between the two? I know we've discussed the two a lot, and we've also heard people saying those can be exchangeable in Latin America due to the excruciatingly high inflation. Sometimes Bitcoin and stablecoins could be used as a store of value both. But what do you think? Do people prefer stablecoins or Bitcoin? And anyone can answer this again.
I can continue since I started already on this topic. And again, I think answer is different in different countries. So where like stable coins or Bitcoin, depending on the country, really, if regulation is better for Bitcoin, let's say, for in general for the assets other than fiat or stable coins, people might be using them as a Bitcoin as a gold, as an investment, as a long-term investment. But if regulation doesn't allow them to do so, of course they would avoid Bitcoin and they would switch to fiat or gold and maybe just use stablecoins as a means of transportation, but for the very short period of time. So in the general area, maybe I would say stablecoins are preferred, and we can see this from the data that Desi was showing in the charts. But both are still traded actively. It's just different use case, and again, depending on the country, it can be a different use case depending on regulation and environment.
Okay. Thanks for your response. Looks like sadly we are at time, so we won't be able to answer all the questions. But thank you both to our speakers and to everyone in the audience for your participation and thoughtful questions today. Before we finish, I'd like to mention that Kaiko will be releasing the comprehensive LATAM crypto market report in the coming weeks. It's the one that Desi mentioned earlier. All participants will receive a copy, so do keep an eye out on your inbox. As I mentioned, also a recording of the session will be shared along with the slide that we showed. And if you have any further questions, specifically for the questions that were left unanswered, sadly, due to time constraints, please don't hesitate to reach out to us. We'd love to continue the conversation. Anyways, thanks again for joining us, and looking forward to connecting with you soon. Bye all. Thank you.
Thanks, everybody. Cheers.